Personal finance number 5, the student will describe how insurance and other risk management strategies protect against financial loss. Okay. A, list various types of insurance such as automobile, health, life, disability, and property. We'll just take those in that order. Automobile insurance is something that everybody's got to have. Now you could have a full comprehensive coverage, or you could have just liability. The main thing that you'll have to pay attention to is your deductible. If you could have a $200 deductible, a $500 deductible, or a $1,000 deductible. Let's talk about what that means. Okay, let's say you had a $500 deductible. You run into somebody and it costs $650. Okay, that means that you pay the first $500, and the insurance company, pays everything after that, so they would pay $150. If you have a $200 deductible, you pay up to $200. They pay everything after $200. So the lower your deductible is, the more expensive it's going to be on your interest. On your insurance rate. Okay, and keep that in mind. A $1,000 deductible is not that good, but you do have it. You have some protection. If you get in a wreck and it costs you or the other person over $1,000, you will pay the first $1,000. They will pay everything else after that. If they decide to total the car, you will pay the first $1,000, and then they will supply you with a car of equal value. Okay, so that's kind of the way it works with car insurance. Life insurance, you have to be kind of watch out for this, because once you get a family and you start wanting to take care of them, and you get a mortgage, and you want to make sure that mortgage can get paid off if something happens to you, life insurance is a good thing to have. The higher the health risk, if you're a smoker or a tobacco user, or some different types of things, if you've had previous conditions, they may jack up your rates quite a bit, to $100, $150 if you're a male. It's typically less if you're a female. It's less if you're 40. If you're less than 40, you'll get a pretty good rate. So there's a lot of things that go into that, but typically people get enough to pay off their mortgages. If something happened to them, that's a typical thing. Life insurance is a good thing to have, because you never know what'll happen. Disability is something that you can use. Short-term disability can be used for pregnant women that need to leave work, and it'll pay quite a bit of your leave if you're not getting pay from your regular job. It will pay that extra amount, which can help out. But and it'll also help if something happened to you at work. So short-term and long-term disability are good things to have. But you could take the chance that nothing would happen to you and not pay those at all. Property insurance is usually required in order for you to get a mortgage, and it will be put into your escrow account. It can range from $500 to $1,000 a month, or a year, and you'll either divide that out in your escrow, or you'll pay it in one lump sum to your insurance company. But it's required, if you have a loan, to protect the bank's investment as well. Health insurance is a big issue, and that could be changing soon in our country, but it's good to have health insurance. At least it'll pay something. I'm not real impressed with our health coverage, but there's got to be something that is better. But you also have premiums on that, and that you'll pay the first $1,500, the first $3,000 of your doctor bill, and then they'll pay everything else. But soon it'll probably be, if they don't change something, where it just covers pretty much catastrophic injuries and some prescriptions and things like that, because it's really a broken system. But as it stands right now, it'll help you. There's copay that'll allow you to just pay like $30 if you need to go to the doctor or something, and they'll pick up the rest. So there is good things about it, but when you get into paying for percentages, 10% of your doctor bill, that is $50,000. Then you'll pay $5,000 of that. It can break people with catastrophic things, which is awful. Okay, so that should explain the different types of insurance and the costs and benefits associated with different types of insurance.